Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, December 3rd. As always, please run your video player at 1.25 to 1.5x with no loss of clarity. You can pause it, slow it down when you find something you want to take a note on or whatever. Okay, so we're wrapping up a crazy week. Don't forget, today is a weekly option expiration. Make sure you run down your holdings so you don't have any rude surprises tomorrow for positions that you forgot about. Please take care of those. Either close them out, roll them, whatever you want to do, but don't let them assign you shares that you don't want. Running down futures, pretty much flat to just slightly red. On the equity front and Bitcoin. We do have oil up 2.3% and nat gas up 4%, but they've been beaten down over the last 10 days quite a bit. So those are going to find their natural resting place and try to figure out if Omicron is going to hold back demand, that whole picture. And then, I remain still positive on oil. I don't have a position, but I think it's going higher. And I'm going to be looking for some stabilization, looking for some support areas where we can potentially take a long position there. But a little too early to tell. I want this thing to settle down a little bit. Today we've got the big November jobs report. I'm not sure if that's going to have a huge impact. I think as far as the economy goes, I think everybody kind of knows where it's at. I think what has been driving the narrative, at least lately, is the Omicron variant and Fed tightening. We've got a Fed meeting in 2 weeks, so I think there's still going to be a little turmoil as we head into that. Just to find out, are they going to accelerate their tapering? Are they going to keep it the same? They've signaled that they want to accelerate it, so I can only assume that they won't change their mind, over the next 2 weeks. But then we've got some potential turbulence there, depending on how fast, are they going to double it? What are they going to do as far as accelerating that tapering? Over on the earnings front, we've got Hibbard Sports and Big Lots today. Not a big day for earnings, but those are the two that I picked out. And then last night we had a lot of drama with DOCU losing about 30%. Asana was down, and Ali was down as well. Ali, the discount retailer. So I'm going to have a slide on DOCU at the end, but for the most part, there's been a lot of destruction under the surface, primarily aimed at, we know about small caps that have gotten killed, but also all the bubble stocks, the real high valuation. And I just use ARK as a proxy. It's not to pick on Kathy Wood, but it's just what she has in terms of baskets. But DocuSign missed their revenue or earnings by 10 million, and they get whacked. 10 million out of 600 million, they get whacked 30%. That shows you how sensitive some of these bubble stocks are to these dramatic rug pulls. So if you're loaded in that area, you already know, but don't hang out thinking those are going to, just rocket back up. If we've got an environment where liquidity is being withdrawn, and that's what it is, if yes, they're still doing some bond buying, but if you go from 120 a month and you cut that down to 60, and then you cut that down to 30, and then you're done, you are withdrawing liquidity as you go, and then the market will be looking ahead to that first rate hike. And a rate hiking environment is going to hit those bubble stocks, those high valuation stocks. I mean, really, really hard. And we've already seen that. So let's dive into the charts. Yesterday we had the big rise after the big rug pull on Wednesday. We had a nice bounce back. We had VIX drop down below 29, but it's still stubbornly high. And I think there's going to be a slight bid in VIX. One, because the Omicron headline risk. And number two, just a little uncertainty for the next 2 weeks about what the FOMC is going to do. So while we want this to, move down, which would be supportive of equity prices, we may see a lot of chop and variability over the next couple weeks as that uncertainty and these different headlines hit the tape. So I think we need to be a little bit cautious up here, way up here at 28, 29, 30 of the potential of another bad day. I mean, when you've got VIX this high compared to down here, you're going to have more intraday travel, and if you're a sharpshooter intraday, that can be a really, really productive environment. So, depending on who you are, it may be a good thing. I just want to revisit our oscillators. We had the extreme reading coming out of Wednesday, minus 90. It's hardly ever been lower. So we were looking for a big day. We got a big day. We're still here at minus 50. So that's still towards the oversold end. So from this standpoint, there's going to be, I think, a general bias to go higher. But just remember, this isn't a straight line kind of thing. You're going to have down days, even though we're oversold or at the oversold end. Just remember that just because we're down here doesn't mean we rocket back up. We've had the initial bounce out of extreme oversold conditions. So, that's the first move. And now just looking for a grind higher from the standpoint of bringing this oscillator back into the midpoint of the range. And then from that standpoint, the indicator loses its effectiveness. And what we've found and to be true is that very effective at extremes. Once it gets up towards the middle of the range, it's not an indicator to watch or trade off of. Only at extremes does this thing really work like a champ. And we saw it in the NASDAQ as well. Down here at minus 90, we got a big lift up to minus 55. But even there, you see that the at minus 55 is often a reversal point. So I'm expecting this to grind a little higher as time goes on. As we go into the equity charts, I'm going to still keep a little focus on the daily charts because I think we're at a critical level, as it were. So on SPY, we came down below the 50. We came down to this 450 level where we had lateral support and uptrend support meet. Those lines did their job. And, that's why I draw them. That's why they're there. This was a former breakout point. So we wanted to hold that 450 level. And actually yesterday, we recaptured the 50. So as you carry your trading forward, the 50 EMA, which is at 456, is a good benchmark level for you. That we got the bounce off a key support at 450. We recaptured the 50 at 456. And now to grind higher, we're going to have to grind through the 8-day and the 20-day EMAs. So right now, prices between the two, the 8 and the 20 and the 50. So we still have to remain tactically defensive from the standpoint of these moving averages have rolled over. You can see that on PPO and RSI as well. So we don't really have an all clear yet. I mean, good that we got the bounce, good that we recovered the 50 EMA, but with price in between the 8 and the 20, we still have to remain cautious, tactically defensive, and not get too carried away with ourselves. Here's the 2-hour. Here was our big bounce yesterday. Here's our 50 in gold from the daily time frame. So now today, I think our first objective on an upward travel is to recapture 459 and then take out this downtrend resistance. And then remember from the other day, the really big level is right here at, let's just call it 464, to recapture this breakdown candle high. And that was where we failed on, what was it? Where we failed on Wednesday. This was Wednesday's price action where we gapped up. We could not take out this 464 level. We took a look above and then failed, and then the whole thing let go. So a big accomplishment for the bulls would be to recapture this 464, and I think that would give us a warm and fuzzy feeling that this bounce was sustainable. Now that doesn't mean you got to wait until you get to 464 to get long. I mean, right here this morning, depending on how things go, you get above 459, and we got it here on the 30-minute chart. You get above 459, and then you come up and take out these downtrend resistance, and then you've got a clear path to 464. So, I mean, you got $5 of travel before you hit that critical spot. And what I did yesterday, I don't know if I showed this, but I went through that bad day on Wednesday and marked locations per our rules where you could have sold. And so, the top here where you couldn't take out the breakdown candle high. The next sell location was entering into the opening gap. And then the third location to sell was when you went from green to red. So you can use those ideas or those little rules, if you will, on the flip side as well. When you go from red to green, it's a buy. When you take out levels from below, it's a buy. And then when you take out that top end resistance, it's a buy. So if you can stick to the rules and not get get too caught up in the dollars or how price is traveling and just stick to levels, that will keep out a lot of these counterproductive feelings, if you will, in your trading and keep you more on a mechanical type level. So let's look ahead to the Qs. Much more muted reaction yesterday. I mean, we were up 0.72%. Not very much in the scope of things. But here we are in the daily chart. And one thing we can say about the Qs is we never broke the 50. So from that standpoint, it remained a little stronger than the SPY, because we just talked about the SPY going down below the 50 and then recovering it. Here we never dropped below, but we still remain below the 8 and the 20. So from that standpoint, we've still got to be tactically defensive. You've got a key level here at 390. I think that's going to be the next level to overcome as far as the bulls go. Get above 390 and then jump above the 8 and the 20 EMAs. Here we've got the levels on the 2-hour chart. We bounced off the 50. We came up here to this 390 level. Now I think the first level of overhead resistance is going to be right here at 394. And just remember that our breakdown candle highs are way up here at 401. That was the level where Tuesday and Wednesday we came up to that 401 level and made quite a few tries to get through that level and was rejected each and every time. Then we came up on Wednesday, tried again, and then that's when we got that big liquidation. So we've got a lot of work to do as far as on the upward path. I think today you can use 390 as your pivot, and then you see the overhead levels at 394, 398, and then 401. What I want to caution you about today, though, and I sent this out yesterday to the group in the afternoon, this, and we're on the 30-minute chart, this has a very classic bear flag look where you take that initial plunge, price action tries to make progress, carves out this bear flag. And so today, if you were to get a break of this flag and come down, say below 389 or definitely 388 and break below here, then I would expect a bigger move to the downside. And the reason I say that, it's Friday, what is, excuse me, what is the risk sentiment heading into the weekend, right? Are people going to be just all warm and fuzzy that, everything's fine, I'm going to stay long over the weekend? Or are they saying, oh my God, what kind of headline could come out on Saturday or Sunday and then wake up to, futures down whatever Sunday night and I'll be trapped? So there may be an impetus to, get out of long positions heading into the weekend. That's why I always pay attention to those final 2 hours of trade on Friday, where fireworks potentially could happen if everybody decides they want to get out of Dodge for the weekend. So I just want to point that out. And what I said yesterday still holds. You come up here today, 392, 393, it's going to break the structure. That will lose that classic bear flag look. If we, rock it up here, it's just not going to be the same. So if you see, hesitation this morning and it really can't get going, and then you see a breakdown, then I think it would trigger, but not if it comes up here and challenges, some of these overhead resistance levels. IWM had a big bounce back day, but still overall weak. Here it came up and recaptured the 200-day, but still in the bottom half of this box and still, beat down pretty badly. A lot of damage in the small cap space. But yesterday the airlines, rocketed higher, hotels rocketed higher, a lot of those cyclical names, and we were up, almost 3%. So bad on the downside, but when IWM starts getting a rebound, you can see that it it can be an outperformer to the upside. And here on the 30-minute chart, we've got a level here at 220.5 that I think will be your pivot. And then a good accomplishment will be to take out 223.5, where this breakdown started. And then we've still got quite a large open gap above that starts at about 226.5. That would be an important place to be long. And, even if you weren't involved down here, you would certainly want to take a long position as it enters this gap. So that's what I see there. I'm going to zip through FATMAAN relatively quickly. Why? Because absolutely nothing happened yesterday. And I think that was telling in itself to have the Qs be up 0.75%, have, SPY with a big bounce, have IWM with a big bounce, and FATMAAN with just absolutely nothing. So on Facebook, and it's going to take me a long time to start calling this meta, but on Facebook, nothing. So you've got a daily pivot point here at 312.5 that you can key off of. And, with price below everything, below the 8, 20, 50, 200 day moving average, by definition, it's lost its uptrend. And you've got to be, I would imagine, leaning to the downside until price can prove otherwise. Apple had that bearish news pre-market yesterday on sagging iPhone demand. We had a big look below, and then it just ground higher the rest of the day. So that was positive. Today, I think 163.5 is a pivot point you can use. And I think an important level would be right here at this 164.5, 165 level. That was the level that failed from the Wednesday close. So recapturing that would get us back above this prior breakout level. So I think that would be important. Tesla. Yes, we pulled back from 1170 back here to 1080, but this thing has not really broken down yet. This to me is, flat bear flag type action sitting right on support at 1080. And I think what traders should do is just, key off that level. You can tell it's a very important level. Why? Resistance back here, support, bunch of support, bunch of support, bunch of support. So that tells you how important that 1080 is. And if it breaks below, I think that's going to be a nice higher probability short trade, because that line is so important there. So then you'd have a move down, a consolidation, and then a break below. And I think, let's see, this distance here is, let's just call it $100. So that would bring it down to 980 to test this prior low down here. And that, from a technical standpoint, would make sense. Microsoft, just like on Tesla and on Facebook, no bounce yesterday, sitting right in a very precarious technical posture here at 330. Below 330, if that sticks, I think you want to be short there. Why? Because you've got this huge void. You've got a good $10 move down to the 50 here, which is a worthwhile trade to make. And then below that, if things get ugly, you could come all the way back to 305 at the original breakout point to back test that breakout. And then from a technical standpoint, you had a breakout and a back test. And then it can, either gather itself at 305 and go, or if it breaks down at 305, then you've got the 200 way down at 280, which would be my next technical target. So don't fall asleep on Microsoft. Amazon as well. Nothing yesterday. Kind of inched below this 34.50 level, and below the 50, we've got the 200, $100 lower, and then we've got a level of support really down in here in the 31, well, I'll call it 3,200 area, where there's this double bottom low. I would think there would be some support in 3,250 and then 3,200. But while below the 50 and below this trend line, I think you've got to lean to the downside until price can prove it and break back above the 50. Google had a probably the best day of all the FATMAAN names. I mean, it was green, came up off of this 2,800 support that we talked about as a pivot, and then moved up to test the bottom of the 50 from below. But note that it didn't cross above. So I think on Google, I think the 50 EMA right here at 2865 is your pivot point. If it can break above, you can use the 50 as your pivot level and be long, or while it stays below, you can be short with with the 50, with a stop just above the 50 if you want to do that. But while it's below the 8, the 20, and the 50, I think you got to be a little skeptical from the bull side. Same thing with Netflix, below everything except the 200. You're here at 620. That's an obvious pivot point with a pretty big void below. I think if you get a clean break below 620, you may come down here to 600 for a potential little bounce area. But I think ultimately you come down here to the 200 at 575, and that would certainly be a worthwhile trade, $40-$45 to the downside on a downside break of that level. Moving on to semiconductors, we came down, filled the gap, broke back above. I think here we're a little bit in no man's land. If you can break above 306 here on this line, I think you've got a good level to be long. And I wouldn't really try to short semis because they've been rather resilient in all this turbulence. I would wait on the short side until you got a break of 299, because you can see, support. That 299 is a really, really big level. So, I mean, if you want to do something intraday, if you see some weakness, you can be short against 306. But as far as some kind of bigger, longer term short, I would wait until you broke 299, which was a key level on the chart. And then from there, I think you got, $8 to $10 a downside for a first stop. And if things get ugly, you're coming way, way back. Now, we talked about all the destruction under the surface, mainly focused on bubble stocks. I still maintain that ARK is the convenient place to be short if you don't want to hunt for, all the individual bubble names. I mean, Kathy Wood has done the hard work for you. She's found them for you. She's found all the high flyers. And that's what her funds are all about. So if things turn in that area, it becomes, a basket of stocks that are going to be challenged. And here in the ARK FinTech, you see this 45 was the prior low. And as long as it stays below 45, I mean, it's a short. What you can do is, depending on your risk tolerance, you can either see if there's going to be a little kickback from 44 up to 45 or 45 and a half, put in a little bear flag, and then wait for the drop. Or you can just say, look, I mean, we saw how much the market was up yesterday, and this thing didn't even hardly move a penny. So you can get short now with the understanding you may get a little bit of a kickback rally. And if you're willing to take that heat and not get panicked out of your position, I think the fintech stuff is going lower. Same thing with ARKG. We have the weekly here, and it bounced a little bit, but still, down significantly over the last couple of weeks. I don't see that changing right away. If you're short, you can go to the daily chart and get a zoomed in look on that. Here's the ARKK. This is the flagship fund. Again, like the fintech, below the prior low, no bounce, right here at 100. And keep in mind, a lot of Tesla in this particular fund. When you see, or if you see Tesla break that 1080, and you're not really a Tesla guy, or the options are too expensive, or you don't want to mess with that one, here's your proxy. Because if Tesla breaks, this is going lower. It's just that simple. So you can use this ARKK as a proxy for a Tesla breakdown. But regardless, this is in a full bear mode situation as long as it stays below the prior low. And here's the ARK web. I don't know if it's 2.0 or 3.0. Right here in the middle. No bounce yesterday. You may get a little bear flag action, but I think this has an appointment with a retest of this low down at 122.50. And then the big drama from last night was DocuSign down 30%, dropping from 240 down to 158 or wherever it is this morning. And I'm showing you on the weekly chart because if you go to a daily chart, it's off the screen, right, on that big of a drop. And you can see the reason that I'm pointing this out is this has the potential to be an absolutely awesome bracket trade. Let it trade today. Let it see what it does. But the reason I say that is look that it's totally out in space here. There is very little structural support above or below price. And when you get that situation, once traders decide, you know what, this is overdone, way overdone, we're buying, we're going to step into the breach and run it, you can get that run up really, really quickly, and you can get a run from 158 up to 190 with almost no resistance. That can be a quick trade for you. And also, if they all say, we got to get out of Dodge, you can go from 158 down to 130 in a heartbeat where there's a little bit of support there. But you can see if things start falling apart, this thing could go all the way back to 90 or even, 65. So don't think that it can't move fast from this point because there's nothing around it for structural support. So let's wrap it up there. Let's see how we wrap up the week. If you're new to the channel, thank you so much for spending some time with me. hit the subscribe button, hit the alarm bell, hit the like button, do all that stuff. I really appreciate it. I'll do my best to keep you locked and loaded with objective levels for your trading. Jump over to the show notes. There's a link where you can register for all my content with a simple email. It takes 15 seconds. Love to have you. And you'll also get a link to our trading room where you can join the rest of us each and every day, supporting each other, sharing trade ideas, all that kind of good stuff. We got a really nice community going, and we'd love for you to be a part of it. So the rest of you, thanks for supporting me. Please pass the link along to other trading groups and friends and family that you may have that would benefit from the work. So let's have a good wrap up to the week. This has been Chris Buss with Traders Profit Compass. Talk to you next time.